Good on, guys, welcome back to another video of price action trading, and today we're going to talk about how sellers won over the market despite looking it like it may reverse. In the pre-market open session we had this sort of trading range looking vibe. The prices were really chopping up and down. We have one leg down, one leg up, and once prices made this lower high of this high, this set up the resistance. This was the kind of place to see that this may look like the head and shoulders pattern. This is the head, this is the left shoulder, this is the right shoulder, or potentially this is the right shoulder. I'm sure some of you actually have heard about this pattern. I don't really trust this, or I don't really call it that way. To me, this is just a resistance forming and we have a failed break higher. But this is still pre-market open, so very early to take any trade, so I'm not going to mark any trades. But as we're coming off the highs right here, this swing right here, this lower high, I used it to draw this trend line. You guys can see if you put it to the bottom, and we have to draw these trend lines to find the high probability setup. So I put it at the bottom right here, and you can see we are working lower. It fits nicely here. We confirmed it here. It fits off the top, and you guys can see massive sell-off right here. So this is a first big sign that the sellers are strong in the market. But you guys can see we overshot the trend channel line, the lower trend channel line. So this is an overshoot. And we have a break. Let me see if it's measured. It's not quite measured. You can see the break was a little bit shorter. But overshoot, this is an unusual, uncharacteristic activity in the market, and usually will lead to break of a trend line or possibly straight up reversal. So you guys see overshoot right here. So your senses should be tingling that it is now possibly going to get to the other side of the trend line, but most likely going to break or straight up reverse in the opposite direction. In this case, you can see one leg working higher, little bit of correction, but we're not supposed to be looking for shorts here, even though we are in a downtrend, because we have an overshoot right here. And a lot of people are going to be buying back their positions, probably heading back to this trend line. So memorize this, write this down. Overshoots, a lot of times, 99% of the times, lead to breaks of the trend lines in the direction or possibly a reversal. So we have a break and a new high. And you guys know that there are rules of trend lines. After break of a trend line, there's going to be a retest of a new extreme. So we have a first break of this trend line. We're coming off the resistance, so you guys can see that the resistance is now holding prices strong. So this is valid, but I still think it's a little bit too early. Even though this is a first leg pullback, second leg you have a break and a new high of the shorter term trend working up higher. So you guys can, at this point on, it is safe for us to be looking to go short. But I think the bar is quite big and you're going short into the EMA. Once again, not bad setup, but once you get this lower high right here and prices are kind of stacking below the EMA, or we're trying to get below the EMA, this is the lower high of this one. We are definitely now, because this was the last chance of this bullish uptrend, trying prices to reverse, and it failed. And this is the safer place. This is the lower high of this trade, and you guys can see what a massive dump this was. And I should have been I should have really paid more attention to this, because once we bounce off here with this bullish bar, this is where I drew my resistance right here, and I drew it exactly something like this. You guys can see that this is now looking like a trading range. And when the prices are in trading range, you're coming off the lows, to the highs, and from the highs to the lows, just like it acted previously. But this is just 1 2 3 4 5 6 7 1 2 3 4 1 2 3 4 5 6 big bearish bar. None of the bars is bullish. This is a gigantic move, gigantic sell-off. So already right here you should have been paying attention that sellers are very strong in the market. This is a gigantic move to make a new extreme, but prices broke the trend line and made a new extreme. But we're coming off the double bottom, we're coming off the support, and we have a new low right here, pullback. First entry, pullback, you work up the EMA. Second entry, short that failed. And I treated it as a reversal pattern. In this case, it luckily worked for a scalp. So this is why, it is important to scalp your position and just scale out just like 1/3. This is what I like to do. Keep 2/3 of your position as a scalp. This is the main portion of your income, your source of income, and leave one position open in case anything happens. So you get the majority of your position on your scalp. But you guys can see this is not ideal reversal pattern. It is a two failed attempts in the previous direction, yes, but we closed below the EMA. You guys can see we're below EMA here, and this is not ideal. Obviously, when you're looking at live and you see this perfect double bottom, you're thinking we're heading here and we are reversing. So when you're trading live, it's a little bit harder to make the decisions, but this is a second entry short that failed. We're heading higher off the support, but we closed below the EMAs, and the proper reversal pattern is characterized that the EMA is holding prices. We made a failed second entry short above the EMA, and the EMA is holding prices, and it's looking like we're gonna go up. So this was a clue. Just pay attention to this when you're trying to figure out how is market going to reverse. We closed below EMA here, so sellers were still kind of strong. And you guys can see how we just made one bullish bar, we instantly failed, and we made a two-legged move up and instantly fell once again. So we barely made it. The prices, the bulls barely made it into middle of trading range, just barely. And you guys can see there's a double top, perfect double top forming right here at this point on. It is still way too early to go short here. Of course, it's, I know, hindsight, it looks 2020, it's perfect, but you're looking for prices to reach the resistance and you have no idea it's gonna fail in the middle like this. But this one leg big down, this was a good indicator that prices might sell off here. And once we made this double top right here and prices failed and we pushed through the EMA below here, if you're looking at a chart like this, you have to stop focusing on the support. I made the video, it's called something like bullish imbalance or something like that. You guys can check it out. That if prices make it barely into middle of trading range and not to the other side like they should have, you have to stop focusing on the support or the resistance that the prices failed. On this side, on the support side, the bulls failed here big time. They barely made it to middle of the range, and so you have to be starting to look for shorts. And this is where I adjusted the line, because this line was probably way too shorter term, and at the end I think the line ended up being something like this. So I was a little bit off here. The line that I found early on was shorter term, but this is how you can still use the shorter term lines. They will still work and bigger pattern will unfold with the time. But you can see prices are trending lower. The sellers are being very strong here. There was a tempting trade to take this lower high of this one, because this is a similar pattern to this. You kind of have a one leg pullback, second leg, one leg, little sideways pullback, second leg up, big reversal bar just like here, and you have this lower high of this high, you have this lower high of this high, but you're going directly short into this support and you're way too close. So even though it's looking like sellers might win with the overall price action, it is still, it is not worth it to take a chance here. And this is the much better setup actually, because here and you guys can see how prices are constantly closing below EMA. This is a big sign. Look at the support right here, and only bounce we made off support was get to the EMA, the key entry point, and instantly turn down. Look at the rejection of this bar. Once again, stop focusing on support when the bullish imbalance is so strong. The EMA held prices nicely. Prices broke lower. Most breakouts will fail, so they came back into the trading range. Once again, EMA is holding prices, and this is a breakout pullback. We broke the support, pull back, and the support acts as a resistance. Nice bearish bar. It is just the first entry, but breakouts, pullback will most likely be always first entries, because that's just how the breakout pullbacks are, because they don't give you a chance to re-enter, because that's why they're so hard to trade. They always give you the one information and you either see it or you don't, and they go without you. So you break lower, pull back, EMA is holding here, double top right here. Everything is, telling you that we should be reversing and going low. And price is just starting to sell off right here. Once again, we are trying to find the key entry points, second entries at the key entry points. So prices made a move to EMA right here. But this is just the first entry, and you have this trend line in play. So you have a break, attempt to make a new high, and EMA is holding prices. And I actually went short here. And I think even though it is just the first entry, this is still good enough for us, because this is starting to look like a very strong downtrend. We didn't even close above the EMA the whole time right here, since we broke below the support. So each time we're closing below EMA, you have this one chance bar, but it's just the first entry, pull back, and you get the lower high of this entry. So I think it's worth it. But the safer entry is obviously new high, first entry long, pull back, second entry long that failed. Once again, EMA is holding prices. This is the safer entry. I was just a little bit, afraid I'm gonna miss this one, because when market is starting to look this week, I know a lot of sellers are going to be jumping in the market and they're going to sell every pullback to the EMA. And you guys can see this worked. First entry long, second entry long, that failed. But even though this is second entry long, we're not looking to go long because obviously this is a downtrend. So we are looking for failures to second entry. We're looking for any reason, because we are looking in this downtrend to sell. So we're looking for any reason to sell. And this lower high is a good reason to sell. And first entry long, second entry long, good reason for us to anticipate the second long failing. It's not gonna go to the other side. And you guys can see we made one final leg down, and we're once again finding the trend line right here. And you guys can tell that this is the way, this is how you can tell that the trend line is valid, most likely, because the last two swings fit nicely on the trend line. And once you are, what's most likely going to happen now, since you're already hugging the lower side of the trend channel, you probably guessed it, we're probably working to the other side. So you guys can see the massive momentum high, but this is just mostly people taking profits. Few people probably just blindly bought here, or institutions, whatever algorithms they use here just to buy something. But a lot of people took their profits in. So once again, we have to stay safe. And how we stay safe? We draw the short-term trend line, that we make it a little bit lighter so it's more pleasing to the eye, and just copy it, put it to the other side. And some of you guys recommended me to use one of these tools or something like this, which I am aware of these. This is just my habit that I like to do. I know it's a little bit longer, but this is what I started with trading, and I don't want to change it. This is kind of, it's like, I guess you can say, my OCD. I'm just very used to doing this the old-fashioned way. So we are working up higher. You guys can see that after break of a trend line, there's going to be a retest of a new extreme, most likely. So we have a break, but you don't want to be looking for long, because we are still inside of this channel working lower. And if you're inside of a channel working lower, only thing you should be focusing is trying to find the reasons to sell. But here, too early to sell. We are inside of this channel. You have a break and a new high, but you are still above the EMA, and it is just like, I thought the prices may reach the other side of the trend channel, because this is what you are expecting. You're right now, in the third of this trend channel working lower. So you're probably thinking the prices will go to here, since we're coming off the lows. And this is the clue. When you're coming off the lows, the prices will most likely reach the other side or break before going lower. But it didn't happen. We stopped sort of at the middle. We pushed below EMA, so this was the good sign. We have a break and a new high. So this bullish correction played out, and now we're safely looking to resume this downtrend. So we push below EMA. This is why we use the EMA, because you can clearly see how nicely we broke below EMA. Pull back, first entry, pull back, second entry. This is also first entry long. We triggered below, and a second entry long triggered, and it failed. And once again, new low right here, because this low is lower than this one. First entry short, pull back, second attempt to go lower. Little tiny bar, bearish bar, a little bit of a pin bar. This is exactly what we want to see. We close at the EMA, but when the market is this weak and you're trying to win long, and a lot of people, when they got trapped here, because they don't realize they already missed this uptrend and a new high. So they're trying to go long way too late, and you can capitalize on those people. They're trying to go long way too late in a downtrend, more or less. So prices traded down lower, and we made a double bottom right here. We pulled back a little bit lower, pulled back, retested the support, and prices were reversing. So once again, you can draw the trend line like this, but you guys can see that we're constantly working up higher, and you're constantly working up higher, you're constantly working up higher. So I adjusted the trend line. Come on. I adjusted the trend line like this to make it a little bit longer term one. And there's nothing wrong making it shorter term one, just like as I showed early. But you have a break and a new high, but still this is just the same case like here. You just have a first entry, and at this point on, if you draw it like the shorter term one, like I showed first, with the break and a new high, then you're looking at the same thing right here. You're looking for some sort of push below the EMA and a pullback there to find the short setup. So, but it didn't happen. You guys can see we still starting to creep up, working higher. We have a little bit of overshoot, so it's most likely going to lead to break. But more importantly, we have a break of this big channel working lower, and you're expecting after this break to prices to make a new extreme. And unfortunately, there was really no setup, because you have a first entry long, second entry long that failed, and the second entry long you're away from EMA, so you most likely know they're gonna get trapped. But I think it's way too early to go short, because I'm expecting to break and a new high, at least attempt to make a new high. If we have a break and we made a double top right here, that's close enough for me to count it as an attempt, because we're in a strong downtrend. So I'm gonna give it a little bit more leeway. But we have a break and we instantly just reverse lower. So looking back, I mean, it looks very tempting because this bigger downtrend is stronger. It's obviously going to be stronger. A lot of people a lot of smart traders, they're going to be selling the break of this trend line in hopes of finding a new low. So a lot of people went long here, and this was a good trap because the second entry long happened far away from EMA, and this is how you know that this was a good trap right here. But once again, when you're watching it live, you're expecting for prices to have a break and at least attempt to make a new high, and just you have to let this go without you know, when you're watching it live, this strategy is you have to follow the rules, and you cannot break the rules here unless you're really experienced. So once again, we bounced right here, and this was very suspicious, but I still wasn't giving up my hopes that we may retest the new extreme. But the way we shot higher, and you guys now have like one swing, pullback, second swing, up, down, up, down. This is starting to look like there is a bigger pattern forming, and this is what sometimes is going to happen, where when you guys trade long enough, you will see that when you start to get this big swing up, you may not even retest the new low as you were hoping for. But you know, just because we don't have a new low, we didn't get burned here or anything like that, because if we went short here, it still would have worked, but we didn't go short here. So, and here low, there is no setup to get trapped. So just because we didn't make a new low, and that may happen, it doesn't mean, you know, like we got burned or we lost money. None of this stuff. We just were patient. For some reason, a lot of bulls jump into the market. So we're gonna do the same thing as always. We're just gonna follow the institutions, what they're doing. So you guys can see there's some geometrical pattern forming right here. You guys can see we're constantly moving up, moving up, moving up. These bars, they don't want to close below. They're so nice. This is like a bearish flag. You guys can see the pole right here, and the flag is kind of waving. This is what Al Brooks calls as a flag. I don't really see it as a flag, or I don't really look at it as a flag. This is just now it's really visible, but I don't really use the terminology. But you can go check it out, Al Brooks' his books. And for those of you who doesn't know, Al Brooks is a price action trader, and quite famous one, who wrote a lot of books and quite a pioneer in learning to read the price chart. And you guys can see we pushed above the EMA, a strong move here, but this is just a bunch of first entries. You're far away from EMA. You made it to the other side, first entry long at the key entry point. This is just the first entry, so none of the safe setups that I try to teach you guys to find. Now you're working lower, you have a break. But I don't think you want to go short, because we are now in an uptrend. So the market has switched. This is a clear uptrend. You're swinging up and down, up and down. The whole time you've been above the EMA here is telling you that the bulls are strong. So break. This is just the first entry regardless, I think. And a new low. And let me grab my bullish marker here, because this is a good place to go long. Right here. So we have a break and a new low. But more importantly, this is the first break of this bigger channel. But it is quite scary to go long right here. You're far away from EMA. Just like I tell you, EMA will pull prices closer to it each time you're quite far away from it. SMA right here. Look how far away you were from EMA here. Prices instantly pull back. But we want to wait for safest setup as possible. And this here, you will just be taking a chance, which is okay, because we are in an uptrend and we're most likely going to go higher. But there is a still small chance that we're still going to retest the new low of this bigger pattern working lower. So you have to sit on the sidelines here, and you have to wait, because right now the most recent trend is up. First entry short, pull back. Second entry short, you're far away from EMA, or you're away from EMA, so this is not a good sign. And the second entry short failed, and you don't want to go short here because you already have a break and a new low. But we have a first entry short, second entry short that failed. We closed above the EMA, big bullish bar. A lot of people are trying to go short here, probably because they saw this gigantic leg down, but this was just an exhaustion. A lot of sellers finally sold off, and a lot of smart people are trying to go long here because it's the first break of this trend of this channel, and this is the safe setup. 2 failed attempts in the previous direction and a nice bullish bar because we're looking to go long. And you guys can see very similar swing once again, big swing down, once again gigantic swing up, bunch of first entries. You're far away from EMA, so there is really no safe key entry point for us, no really safe second entry. You have a first entry long, second entry long right here, but you're inside of this trend line, so you have to wait for prices break a new low. And this just, now you guys can see the support, but at the time this swing just set up to support. So after we bounce here, and you get a first entry short that failed instantly, and a second entry short trigger right here, and a big bullish bar, but you're going long, double top right here, and now we made a triple top, so you're clear right now in a small little trading range. And you can see bars are trying to stack next to each other, and you don't want to go long directly into here because you're definitely going long into the resistance here, and you're going long way too high, and you have a break and new high potentially. So I thought, even though it looks very strong, I still thought you want to give it a little bit more room. You're going long way too early here, and you have a failed break higher of this congestion, and what's most likely going to happen, most breakouts of congestion will fail. And I want to mention, guys, this about the congestions: don't fade the breakouts. Don't short this bullish breakout because we are in an uptrend. So just because most breakouts will fail, you only want to fade the breakout in your favor, in your bias is what I mean. So right now this is a bullish bias. The price action structure, market structure is looking bullish, so we only want to fade the breakouts lower. We don't want to fade the breakouts higher. In the same way, when we are in a downtrend, you want to fade the breakout of trading ranges of small little congestions higher. You don't want to fade the breakouts that go lower because they are not as reliable, because obviously the bus is down. So you have a failed breakout higher, obviously, like most breakouts of these congestions will fail. Let the prices pull back, and look how nice, this is the new high. We didn't trigger above here, we triggered above this bar. So first entry long, pull back, second entry long right here, trigger right here, all the way down here. And this is a good setup because we finally, once again, confirmed the trend line, and more importantly, we're coming off the support here. So you got 2 congruent patterns merging, running congruently. Support, key entry point, trend line, key entry point, second entry long. So this is a high probability setup and a nice bullish bar. A lot of people probably are going to be scared after this one leg down, but this is exactly what you want to see. The deeper the pullback is, the better, and a lot of smart people are going to go long here. They're going to buy here, and you work it up higher, you pull back, nice bar, very tempting to trade because we're coming off this trend line. And even though we have a break and a new high, the trend is so strong, and you know, here you're just hoping for scalp here. You're not really probably expecting for prices to go higher and higher after breaking a new high, but the 2 setups, the key entry points are so strong, and second entry is so strong that you're just hoping for scalp. So this was a very tempting trade to take, but once again, you're going long into this resistance. What I like here better is first entry short, pull back, second entry short, failed right here, but more importantly, we broke the resistance, pulled back, and EMA is holding prices. So EMA is holding prices. This is a breakout pullback pattern. You broke the resistance that now acts as a support. The bus is up. We're coming off the trend line. First entry short, second entry short, failed. Nice bullish bar. You guys can see once again, nice move up. And you finally have another break and a new high. And now it looks like prices may start reversing. You have a new high right here. First entry long, second entry long, below EMA, double top right here. but you know, I wouldn't reverse market this early. You know, anything can happen, so this is way too early to reverse market such a big trend. I mean, this was a gigantic trend in the big scheme of things. But you guys can see once again reversal pattern, and this is the reversal pattern we like. Push through the EMA, and EMA is holding prices. Look, this is how you can see that the market is reversing. So finding the reversals gets a bad rep, but it is really not that hard. I mean, you don't want to reverse market this early, but you guys can see that it still works. It constantly repeat over. And if you just study this chart, you will get the hang of it and you will find it. But the takeaway from this lesson was, hopefully this won't be too long. The takeaway from this lesson was the overshoot early right here when the trend line was something like this. This was the early overshoot. And this gigantic move down. This already should have told me that there's a lot of sellers in the market. A lot of people probably just have their resting orders right here. They were buying blindly, because when you're this far away from EMA and you're at the support double bottom, a lot of people, a lot of institutions, a lot of people, they have their resting buy orders right here. And I may make a video in the future for resting buy orders, but although I'm a little bit hesitant because this is such a risky trade, because the last thing I want to do is people looking how far away you are from EMA and just buying blindly. Just because it works here and there doesn't mean that the beginners should put the resting order here and buy blindly. So, and this is not ideal reversal pattern because we're below the EMA. And definitely here we made it to the middle of the trading range, barely double top right here, and instantly got slapped on our hands, and sellers were really strong at this point on. So once again, bullish imbalance in trading range, and you guys can see what it leads to, and you're below the EMA each time. And obviously you have to plot the EMA. This is a 21 bar EMA. I mean, the EMA is so helpful. It is almost ridiculous how much information it will give you if you learn how to use it. This is just a simple moving average, exponential moving average. This is nothing, no formula, no mathematical formula that 20 scientists made up in the lab. This is just a simple indicator, but if you learn how to use it properly, which I tried to show you guys, they will give you so much information, it's ridiculous. And even here, if you you're below the EMA, so the reversal pattern is not ideal, and here you're below the EMA in a favorable direction. So if you delete the EMA, you have no idea why the prices. If you delete this EMA, you have no idea why the prices are below, why the prices are turning down here. So just something to think about. So hopefully you guys enjoyed the video. Hopefully you guys had a good trading day and enjoy your weekends. Study the chart, and I see you guys on Monday. Bye guys.